Hello everyone, welcome to today's video. Today we're going to look at Tesla and we're going to try and work out to see if Tesla is currently overvalued or undervalued. So today it currently sits at $440 and that's as of the 26th of September 2025. You can see here Tesla over the past 3 months has returned a price of £35.2% over the past 3 months. Over the past 6 months it's been 61%. Year to date, 16.1%. Over the past year, 73%. Past 3 years, 57%. 5 years, 174%. This past 10 years, has returned over 2,541%. Wouldn't it have been nice to buy Tesla back then? Numbers only what, $14 a share. That would have been tasty. So yeah, current 52-week high is currently sitting at $488. The 52-week low is 212, so we're sitting up near the top end of that. Looking down towards the growth, so over the next 2 years, the revenue compound annual growth rate, currently looking at about 6.5%. The earnings per share 2-year growth rate, not overly happy with that. I'd like to see it to be a positive number, so that basically tells me over the next 2 years they're not expecting the net income to increase, or else they're going to issue more shares. So I'd like to see this as a positive number. So that to me, bit of a red flag now at the moment, but we'll get further on just to see what we can find. Over the last 3 years, the revenue CAGR was 22%, and over the last 3 years, the earnings per share CAGR is 2.3%. Looking down here to the valuations, the next 12-month PE, they're estimating about 224, whereas the last 12 months was 265, so there's a wee bit of a drop there. So there is dividend yield. Tesla don't pay dividends, so there's no yield there to look at. If we jump into financials, we'll start off with the balance sheet. So we'll come down here and we'll look basically just to see what cash they have. So you can see the cash has been slowly increasing each year on year. So we're just over the last 12 months, so we're just slightly higher than the 2024. Come down to the total current assets, so you can see there's a steady increase there, so that's good to see. There's definitely assets there, but the cash and the short-term investment, that's good to see that that's growing, especially the cash there. Now the cash has fallen off slightly, but we're still up there roughly where we're at. Total assets, as I say, they're still growing, so they're growing nicely. So that's what we like to see. Total liabilities, they're pretty stable. They're not too big of jumps. So 26, 28, 30, 36, 43, 48, 50 over this past 12 months. So they're steady incline, so not too bad there. Coming on down, total liabilities and equity, it's pretty stable as well. You can see there's quite a few big jumps there, 62, 82, 106, 20, 122, 128 over this past 12 months. Net debt's good to see. It was high there for a few years, but since 2020, they have been paying off debts. So they have, and it's right up to 23 million now. Sorry, 23 billion. So they have more cash in hand compared to total debt. So that's good to see. Jump across into the income statement. So revenues are growing, but they have definitely slowed. You can see here over the 2021 they've been increasing, but then since 21 to 22 they've dropped down to 51%, and 22 to 23 have dropped down to 18, and from 23 to 24 they've dropped down to just 0.9% growth rate or revenue increase. So you can see they've definitely been a big slowdown since 2021. So that's a bit of a sign just to keep a wee eye on that, just to see what's happening there. Gross profit again, it's actually fallen off slightly. Again from 2021, you can see the gross profit here was down from 105 growth down to 53, and it's actually falling off quite a bit there now. So it is. So even the next 12 months, it's less than what it was last year. If there'd been 3 months left in the year, will it be lower than last year? I would say probably will, but let's see what happens. Total operating income, it is falling off as well. Obviously there's quite a bit of R&D expenses there. You can see that line. It is increasing each year, which is what you expect from Tesla. They are going to do a lot of R&D. So that's going to obviously impact operating expenses and operating income. So the operating income, you can see, has been dropping off again since 2023, 23, 24, and then the last 12 months it has been dropping. So things definitely are slowing down for Tesla, in my opinion, so far. Net income, this is the biggie. So yeah, it's again from 2022, 23 has been rising, and then from 23, 24 it's dropped off, and again it's dropped off this past 12 months. So net income, obviously that's the profit. So things are definitely slowing down within Tesla. Coming on down here to the basic earnings per share. Again, you can see it reflected, that net income reflected in earnings per share. Peaks there 2023, and over this past year drops off really, nearly drops off pretty much 50% your net income. So there's definitely something up there. Jump across to the cash flow statement. So you can see net income brought across from the income statement. Looking down here, your cash from operations slowly increasing, not increasing by much, but by about $1 billion a year. So it's definitely slow. There's nothing exciting happening there. There's no big jumps. Cash from investing, they're definitely doing a lot of investments over there. You can see £15 billion over the past 12 months between capital expenditure and investment in marketable and equity securities. So yeah, they're definitely spending money there and doing investing. Cash from finance, you can see over this past 12 months they've taken out another 4.8 billion in debt, and they've repaid 5.6 billion in debt. So they're basically getting a cash from finance over this past 12 months is 563. So yeah, so they're not making too much cash from financing now at the moment compared to the previous years. So net cash in hand, it's definitely up since last year, 1.3 billion compared to the previous years. So there's definitely a big jump in cash in hand. And then finally the free cash flow, definitely making a lot more money or a lot more cash to play with. It has been again high in 2022. We've seen that in the previous numbers there. 2022, 2021 seemed to be two good years, but then since 2022 it has been dropping off, and there's a slight increase again on this past 12 months. Okay, so that's the financial documents. Let's jump across now into my spreadsheet, run a few formulas and see if Tesla is overvalued or undervalued. Okay, so we're now in the spreadsheet, and you can see I've pumped in all the numbers here for Tesla. So the current price, the current outstanding shares, the total last 12-month net debt. For the growth, it's or the ESP I use or the revenue. This time I've used the revenue because obviously we looked at the ESP and there is no growth in it. The valuation wise, we're going to use the next 12 months PE. Dividend yield, there's nothing there. We don't do dividends in Tesla. Next 12 months earnings per share, £1.96 or $1.96. And then we have the last 12 months free cash flow in there as well. And then no estimates or anything like that for the dividends. So the first valuation is earnings per share multiplied by the PE multiplied by the growth. So you can see the intrinsic value comes up with is 469. Now it says pounds here, but it's dollars. The current price is 440. So it is 94. The current price is 94% of the intrinsic value we've calculated here. So there's still about 6% headroom here. Jumping across to Benjamin Graham's formula. Big difference. You can see the intrinsic value in this calculation is £88.27, whereas the current price is 440. So massive difference here. The current price is 499% of the intrinsic value calculation. So a massive difference. That's obviously a bit of a sign there to say that there's something up here. Looking at the cash, discounted cash flow. I work basically on a 2-year period. You'll see a lot of places on the internet look at the 10-year period. I like to look at the 2-year period because it's shorter and companies will definitely know what they're doing. So the intrinsic value for it is $364. Again, the current price is higher than that, so the current price is about 121% of the intrinsic value for the discounted cash flow. So it's high again as it is. The dividend discount model, there's no dividend, so that doesn't matter. So here's the outputs. So taking in the 3 different valuation methods that we've used, the average intrinsic value is $307. Current price is 440, so there's about 43%. That's about 43% higher than the intrinsic value, the current price. So yeah, basically it's overvalued in my opinion. If you're wanting to buy Tesla based on the current valuation models that we have up here. You basically need to pull back to about $100 or $215 per share. So it's well above it. So would I be buying Tesla now at this point in time? No, definitely not. If you've got shares in Tesla now at the moment, watch it closely. Keep a good eye on it to make sure that it doesn't start to drop and you lose any profits. But if you're not in Tesla now, you don't own shares, you're thinking of buying shares. If it was me, I wouldn't be buying any shares. So is Tesla overvalued or undervalued? It's overvalued. Okay, thanks for watching the video. Please hit like on the video and also subscribe to the channel as well. I'm going to be doing a lot more of these videos. If you want, stick in the comments below what companies you'd like me to value, and I'll do the exact same for them. Thanks very much. Bye bye.